Palantir Technologies continues to ride a wave of momentum as investors show renewed enthusiasm for artificial intelligence and the company's expanding presence within the government sector. On Monday, before the opening bell, shares of Palantir were trading close to 5% higher. This early climb comes after a notable decline at the end of the previous week, where the stock fell by approximately 11% on Friday. That steep sell-off was not due to weakness in the company's fundamentals, but rather because of the FTSE Russell Index rebalancing. This regularly scheduled event requires fund managers to shift their holdings so their portfolios match the revised structure of major indices like the Russell 1000. Palantir had surged over 400% since the last time the Russell indices were updated, which earned the company a spot among the top 200 large-cap stocks included in the Russell 1000. While this milestone reflects Palantir's impressive performance, it also triggered a wave of mechanical selling. Passive index funds, which aimed to mirror these indices, had to realign their weightings, and that led to significant downward pressure on the stock price during Friday's trading session. So while the dip may have appeared alarming to casual observers, it was largely the result of technical rebalancing activity rather than a reflection of Palantir's underlying business health. Investor confidence was quickly restored as new developments surfaced on Monday. Palantir made a key announcement about forming a strategic partnership with Accenture Federal Services. Under this agreement, both companies will collaborate to train 1,000 professionals from Accenture's Data and Artificial Intelligence division to use Palantir's Foundry software and artificial intelligence platform. This initiative is aimed at accelerating the implementation of modern automation capabilities within United States government agencies. Through this partnership, government teams will gain enhanced tools that make operations more efficient, more responsive, and more aligned with emerging digital trends. This collaboration further underscores Palantir's central role in enabling public sector innovation through artificial intelligence. The company has consistently positioned itself as a pioneer in offering advanced data analytics and artificial intelligence solutions that solve real-world problems for agencies handling national security, defense, logistics, and public services. The training of 1,000 professionals is not just a symbolic gesture. It represents a large-scale investment in knowledge transfer, ensuring that a wide swath of government operations can be empowered by Palantir's advanced platforms. This also demonstrates that Palantir's growth is not purely speculative, but rooted in expanding its technological reach into government agencies that demand high performance, reliability, and innovation. Despite the volatile price action last week, many investors remain committed to holding Palantir shares. The company sits at the intersection of artificial intelligence innovation and government contract expansion, both of which are long-term growth trends. As artificial intelligence continues to evolve, Palantir is well positioned to convert its intellectual property into practical solutions for both public and private sector clients. Investors are also paying close attention to Palantir's continued execution in developing tools that can scale across multiple industries, from healthcare and energy to national defense and logistics. Turning to analyst sentiment, Wall Street currently holds a neutral outlook on Palantir stock. Over the past 3 months, analysts have issued a total of 3 buy ratings, 10 hold ratings, and 4 sell ratings. This mix of opinions has resulted in a consensus rating of hold. The average share price target among these analysts is $104.27. When compared to current price levels, this target suggests a potential decrease of about 20.25%. This means that while some analysts see limited upside in the near term, others believe the current valuation already reflects Palantir's forward-looking opportunities. Now let's shift our focus to the technical side of Palantir's stock chart. After finding support near the 200-day moving average in early April, the stock experienced a strong rally. This uptrend was driven by renewed buying activity and growing optimism about the company's artificial intelligence tools. However, that bullish momentum was abruptly interrupted during Friday's session when Palantir dropped by 9%, accompanied by the highest trading volume seen since late February. The heavy volume reflects institutional reshuffling rather than any material deterioration in the company's prospects. Despite that pullback, Monday offered some relief to bullish traders. The Relative Strength Index, which measures momentum, climbed back above its neutral level. This suggests that the recent sell-off may have been temporary and that the stock could be stabilizing. From a chart analysis perspective, there are a few important levels that traders and investors should keep on their radar. The first key support level sits near $125. This area aligns closely with the upward sloping 50-day moving average and a trend line that traces several previous price movements going back to a prominent swing high in February. If the stock holds above this level, it may indicate renewed strength and buyer interest. However, if the stock closes below this line, the next likely destination is around $97. This region coincides with a March high that temporarily reversed the trend and also reflects a mid-April consolidation zone around the 50-day moving average. Should downward pressure persist beyond that, the third major support zone appears around $83. This level sits near the 200-day moving average and represents a long-standing range of trading activity that occurred between December and April. It also lies just under a projected pattern target that extends the stock's previous decline from mid-February through early April, and it transposes that trend from Friday's recent high. This technique gives a realistic picture of how far the current retracement could go if the downward trajectory resumes. On the upside, there is a critical resistance level that traders will be monitoring closely. That level is approximately $148. This zone lies near Palantir's all-time high and could be a point where short-term traders decide to take profits, especially those who took advantage of the dip during Friday's sharp decline. If the stock manages to break through the ceiling with conviction, it could signal a renewed bullish breakout and bring even higher price targets into play. In the end, Palantir Technologies saw its stock rise nearly 5% in pre-market trading on Monday after a sharp 11% drop the previous Friday, which was largely caused by portfolio adjustments during the FTSE Russell Index rebalancing. The company had surged over 400% since the last rebalancing, qualifying it for inclusion among the top 200 large-cap stocks in the Russell 1000, which led to temporary selling pressure from passive index funds. Adding to the positive momentum, Palantir revealed a strategic partnership with Accenture Federal Services to train 1,000 data professionals on its Foundry and artificial intelligence platform to improve United States government operations. Despite recent volatility, investors remain confident in Palantir's role in the growing artificial intelligence sector, although analysts maintain a hold consensus with a price target of $104.27, indicating a possible downside of about 20.25%. Technically, the stock is showing signs of recovery, with key support levels at $125, $97, and $83, and an overhead resistance zone at $148, which could become a critical test for future gains. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.